Thank you for being so prompt, everybody. And I think you'll get your reward when I stop talking and bring George up, and then we have our panel later. But what I wanted to do before George talks to you is introduce a new initiative from Swoboda for next year. I'm very delighted for everybody who accidentally teed up this proposition this morning. I think the whole conversation this morning suggests that we have found some relevance with this initiative. It's called I4 Incubator. What we propose to do is to get perhaps 5 provider partners to work with small groups of credit unions, 2 or 3 credit unions, over a 12-month period to learn about deploying an AI solution in the credit union operation. So it's a test and learn thing, but it's collaborative. So we will bring all the solution providers and all the credit unions together on a sort of quarterly basis to show how is this thing going? How is it working for you doing this kind of change? What are you learning? What we want to get out of this, or we want you to get out of this, is not solution A is brilliant and solution B is not. What we want you to get out of it is, I understand AI better now, and I can see how it might fit into my organization. Or do you know what? I'm not going near that thing with a barge pole until they've sorted out these ethical issues. That is a good outcome for us, that learning about this. And we will produce a report at the end, which we can share with the world. From the partners' perspective, we hope that they'll obviously get an opportunity to understand better the needs of credit unions, how their AI solutions might actually work, be useful, help us achieve our goals. And it will help them obviously get some credibility with you, we hope, assuming it all goes well. So we have an application process open at the moment that Gary is running. Where's Gary? There's Gary. So for suppliers, Gary's already been talking to quite a lot of suppliers. We can't tell you who they are at the moment. There's a process we're going to go through to select a range of suppliers. We're not going to go for 5 core systems because that will be silly. We'll be picking 5 different kinds of solution from hopefully front, middle and back office, ideally, so we can test out this AI thing in different parts of our organizations. We'll have to see how that process goes, so we can't tell you who they are at the moment, but we've got some really interesting conversations going. And then we'll need to have some credit unions to work with them. So if you would like to be the credit union, if you want your credit union to join in, there is a small fee which helps us cover the cost of our project manager, David, and unfortunately David couldn't be here today. Some of you may remember David is the guy who wrote our paper on Introduction to AI at the beginning of this year, and we did a webinar with David after that. So if you want to, there's an expression of interest link in a post on the website. I should have put that, maybe should put that on here, but I think it's on your flyer. That's right, it's on your handout. There's a QR code, takes you to the web post, which talks a little bit more about I4, and talks about, and there's a link to expressing interest. It's about £2,000 to participate. And what we'll try and do is get a range of credit unions with a range of different attributes so that we can maximize learning for everybody out of this initiative. Gary, is there anything I need to add to that? So for next year will be a test year for us as well for this whole concept. This is a concept we have unashamedly ripped off from Filene Research Institute that some of you may be aware of. Why reinvent the wheel? This work, but as other organizations, I think Gary sent me a link to the American Community Banks Association who have something like this. This is a sort of tried and tested method of getting customers and providers to work closely together for their mutual benefit. It's expandable. So if we have more demand from credit unions than we can accommodate, then maybe in 2027 we can, as we understand how this is going to work better, we can bring more people in. And if other people copy it and want to do it as well, then that's fine by us. I mean, the more the merrier. What we're trying to do is help everybody learn. So if you've got questions about I4, I think David's email address might be on the post, but Gary's also here. You can always contact me and we'll give you all the information we can. At this stage, we're still going through that process. The expression of interest closes middle of December for the credit unions. So if you are interested, get your name in the hat. We'll come back to you. So, advert over. I'd like to introduce our esteemed American guest and good friend who's come to a few of our events now. Many of you will know George. George Hofheimer, who has tremendous experience. He was also in the research business until he cleared out a few years ago to do something. I can't imagine what was more fun than that, George, but, you know. and works with a lot of American credit unions now of all shapes and sizes, and just has a fantastic overview of how those organizations are thinking and developing, partly because he's advising them how to think and develop. So, hand over to George.
Thank you. I want to put a big plug in for the I4 because at Feline, which is a sister organization to Swoboda, we have the I3 program. So you guys are one eye higher than we are. And I had been participating in that program since the very beginning. It started over 20 years ago with the notion that a lot of what Paul was saying about our industry at the time is that we weren't in the fast lane. We were getting passed by so many people, and I3 was a very small but pretty substantial catalyst for credit unions in North America to figure out how do we leapfrog some of these new concepts and ideas. Initially, we thought it was going to just simply be a professional development program. The way that we designed it was people right below the CEO level that aspired to be CEOs, teach them an innovation methodology and set them loose, basically on all of the problems that our industry was facing. What we discovered, probably a little bit too late, and the thing that I think is brilliant about your program is that you're involving partners and vendors into the process, because at the end of the day, credit unions need the partners and the vendors to help them with the implementation side of things. The last thing I'll say about the I4 is what Molly shared with you right before lunch. That was a very short but effective illustration of some of the things that the I4 program is going to do here at Swoboda. So if that kind of got you activated, we only spent a few minutes on some of these design thinking principles or human-centered design principles. They can be extremely powerful. In I3, the programs that we developed, there's hundreds and hundreds of ideas that came out of there, but innovation is a messy business. Not all of them are going to succeed. But the ones that succeeded have really helped push credit unions up the value chain in our market. So, little advertisement there for I4. I would really encourage you to do that. And by the way, everyone has stolen the I3 concept. So every one of our state associations, regional association, national trade associations are doing this kind of stuff. And we saw that as, when I was at Feline, to be a success, because imitation is the sincerest form of flattery or something like that. Is that how it goes? Okay, doing innovation right. This morning, Nick emailed me. He says, "Is it okay if we just call this session Doing Innovation Right?" I'm like, sure. And then I'm going to offer a little subtext. I'm big on boring. I am really big on, I'm bullish on boring. I'm big on boring. When we talk about innovation, we tend to think that it is this lone genius that's sitting there with these brilliant ideas, creative people from outside the industry come into our industry, they give us ideas, but fundamentally, some of the best innovations, especially in a heavily regulated industry like we all live in financial services, boring ideas win. And it doesn't mean that they're not exciting. They're exciting to us. They're exciting to our members. So I want you to keep that in mind. That's kind of a theme that I would like to go through here. The agenda for today, I'd just like to give you a brief introduction. I know a lot of you, and thanks to the hospitality from Swoboda, thanks Nick and Brigitte, it's great to finally meet you in person. You've been great, and then everyone here, it's just great to see happy smiling faces, and as a jet lag person, I'm extremely pleased with all of the name tags, so it seems like I remember everyone's name and everyone's organization. So I'm just gonna introduce myself real quickly. I wanna spend some time about what is innovation, because I think it is a misunderstood term. And what I hope to do is demystify this concept of innovation. Yesterday we had a workshop, it's a program called Sense Makers, made up of CEOs. And we spent about 3 hours yesterday going through this design thinking principle in a lot of detail. But we also spent some time talking about, like, what is innovation? And the whole idea is to demystify it. It's really not a complex topic, so spend some time on that. I want to hear your perspectives as well as to what you think great innovations are outside of our industry, but then also inside of our industry, just to get a sense of that. I want to give you a framework and some examples of what innovation might look like, not today, but into the future. I think it's always important to think into the future when we're thinking about innovation. And then closing out with a little bit of lessons learned, mostly from that experience of I3. So I ran that program for a number of years and then oversaw it for a number of years as well. And then in my current work advising credit unions, we're doing a bunch of product and service development types of things. And hopefully some of those lessons learned will be applicable to you. And then we'll end with the so what. Like, how do we make really good innovation that is boring and effective? So that's how we're gonna end the day. And I will keep a watch on this beautiful confidence monitor here. So outcome at the end of the day, I want to give you just practical guidance. I don't want to give you like fluffy jargon-filled stuff. I want to have stuff that you can take back Monday morning and go to it. Last thing I will say is that the Liverpool reserves are only 3 points behind the real Liverpool team, and it's true. And I went I walked to the stadium the other day to see it's Hill Dickinson now. It's way too nice for Everton. It's way too nice. It's way too nice for us. We don't deserve nice things. I think Patty, you said that. We don't deserve nice things. And then, by the way, congratulations to England for qualifying. Congratulations to Scotland for qualifying. Scotland, you just made it way too exciting. Wales, congratulations. And then Ireland, my entire social media feed is only showing Tony Parrott now. So I think I've watched that video probably 100 times of him scoring that final goal. That was definitely not on my bingo card. 3 goals for Tony Parrott, but whatever. And then finally, many thanks to the sponsors, Heritage Credit Union and my good friend Karen at Enterprise. Appreciate you and your hospitality. Okay, so I'm not going to go through all of this. I just want to give you a sense of what I've been working on, so you just have context for that. I'm part of an organization, it's a nonprofit organization that's trying to make it easier to start credit unions in the United States. It's really hard. It used to be very easy. It used to be like everyone has the same origin story. It used to be 5 dudes worked at a factory, threw 20 nickels into a cigar box, and now they're a $5 billion organization. It's very hard to start a credit union now, so myself and about 7 other people have started an organization called the Credit Union De Novo Collective to try and make it easier from a regulatory perspective to start credit unions because the needs are still there. I'm actually helping start a credit union for the disabled community through a sub-brand agreement with an existing credit union because it's so hard to start an actual credit union. So there's a national disability organization that wants to start a financial institution for the benefit of disabled people in the United States, but the regulatory requirements are so high. So we're actually doing an innovative thing where we're working with a credit union that is well established, and we're creating a sub-brand for them. Doing a lot of strategy work. And then interestingly, I'm doing a lot of product development work. There's been a lot of talk here about collaboration and the need for collaboration amongst credit unions. The way that we organize that in the United States is through CUSOs, Credit Union Service Organizations. These are for-profit entities that are owned by credit unions. And just some examples of stuff that I've been working on, some specialty lending types of products. I work with a group called the Circle Fund, which is basically a mutual fund where credit unions are capitalizing a mutual fund to make direct investments into fintechs and then able to then sit on the boards of those fintechs so they can influence strategy. It's really cool. Our industry in the US is much larger than it is here. We have about $2.4 trillion of assets, representing about 4,200 credit unions. And this mutual fund has raised almost $600 million in capital to do direct investment into fintechs. Pretty cool stuff. One of the things I'm really proud of, one of my clients noted a problem, and that's one of the key points of innovation is it's really all about solving problems. And one of the problems that they identified that somebody mentioned last night is we need to tell our story better. Right? This is a common problem. It's like we do all this great work, but nobody knows about it. So one of my clients said, well, what if we were able to hire one of the best public relations firms in the entire world? And the answer from her credit union's perspective was, we do not have the money to do that, But if we collect 25 credit unions together and we pool our resources, we can actually hire that public relations firm. And it's a program called Backbone. If you look it up, it's a QSO that is owned by one credit union and capitalized by 20-something other institutions. And now we're starting to get press. We're actually starting to get covered in earned media about all the great stuff that's going on in credit unions. So I'm really, really excited about that. And then the last thing is this same institution has also started a credit union specifically looking a lot like the I-4 program, where we're involving developers and vendors to develop new products and services on behalf of credit unions. And the first project, does anyone here play Roblox, or does their kids play Roblox? Yeah? Yeah? So we're actually starting a credit union on Roblox. So if you don't know what Roblox is, I don't know what it is. Like me, because I have older kids, it is it's a virtual reality space where billions of dollars are spent every year, and there's no financial institutions on it, but there are some companies and corporations. So fairly soon there's going to be a Roblox credit union, and if that is kind of blowing your mind, just kind of keep an open mind around it, because it's a way to attract the next generation of consumers. Okay, so at your tables, does anyone here know how to whistle really loud? Okay, what's your name back there in the glasses? Carmel? Okay, because when I was a kid, we were free-range kids back in the day. And it wasn't my mom, but it was my neighbor's mom that could whistle. And whenever we heard that whistle, there was we got very nervous and we went straight home. So what I'd like you to do at your tables is to talk about your favorite innovation. This is just a 1-minute thing, okay? And then can you, in 1 minute, can you give us the whistle so we get everyone's attention back? Okay, so maybe can you give us a little sample of what that whistle is going to sound like? Yes, 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 I love it. I love it. All right, okay, start the timer now, 1 minute, and I want to hear maybe 2 or 3 people. What's your favorite innovation outside of the financial services industry? Hey, there we go. Right on. It still makes my heart skip a beat. I'm like, oh my God, I'm in trouble. Okay, favorite innovation outside of financial services. Who has one that they want to share? Just shout it out. Yeah, what do you got? What's that? The internet, yeah. And team together? Combined? That's funny. It's it's so funny. It's like we don't even talk about the internet anymore. It is part of our lives. I was talking. I have a lot of nieces, and I was talking to her about the internet, and she's like, "Yeah, I listen to them a lot." And I'm like, "Oh, it's a band too. That's cool. Right on. Okay, cool. Others? What's that? So satellite navigation, GPS. Yeah. Are you in a situation where if you don't have it, you don't even know how to get home? Yeah. How about one more? Disposable what? Oh, disposable nappies. They are pretty good. Our kids were the weirdos that had cloth diapers. Yeah, but I can see the appeal of that. So when we think about outside of financial services, I could feel the energy in the room. If you're interested, and I don't care if you're not, but here's my favorite innovation. I'm a kid, born in the early '70s. My favorite innovation is the Walkman. I felt like this was like my moment of independence. And the cool thing about this is that this is an iterative technology. I vividly recall we were going on a field trip to some museum in Washington, D.C., where I was born, and it was a technology museum, and had an exhibit from Sony. And this was probably the early 80s, and they showed this device. It was probably about the size of this thing, and they said, today, in the laboratory, we are able to fit an entire album of music on a device this big, right? And you think about the iterative nature of all of that, and it's quite amazing. The point about this is to kind of think broadly about how innovation can change our lives. And for all of the things that you mentioned, each one of those has a core problem that is meant to solve. Like, obviously we did not get the message around the cloth diapers. We were actually living overseas at the time in a country that didn't have disposables, so it was a necessity. But fundamentally, it's about solving some sort of problem. So if we can do this one more time, so one more minute on your favorite innovation from financial services, okay? And I'll tell you the story about this in a second. So 1 minute, favorite innovation. Yeah, there we go. All right, what do you got? What do you got for financial services innovation? Okay, we have a very polite person back here raising their hand. I love it. Yes, what do you got? Apple Pay. Yeah. What about Apple Pay is amazing to you?
It's so easy.
Yeah. Yeah. Simplicity. Yeah. Yeah. At the core, does it do something different than your card? What does it do? Yeah. Yeah. Super simple, right? Yeah. Great example. Others? I don't even know what that means. What does that even mean? Hold on.
12 pennies equals 20 pennies equals £1. It's obvious.
Okay, I got you. So in financial services, I remember when we were starting the I3 program, and the question that people asked us was, do we need innovation in financial services? And because we're the second oldest profession in the world, and fundamentally all we do is we buy money from people and we sell money to people. Like fundamentally that's pretty much what we do. Some of us sell more money than others, some of us buy more money than others. Fundamentally that's all we do. And when you kind of think about innovations in financial services, there's kind of a dearth of really exciting things, right? We look at the automated teller machine as one of the biggest innovations of our time, which, by the way, kind of started in the late 50s, early 60s. And I put this picture up there because in the state that I live in, Wisconsin, which is north of Chicago, snows all the time, the financial institute or the credit unions in that state branded all of the ATMs as time machines way back in the 80s when they started to launch. And people just thought that was the coolest thing. And fundamentally, all it is a wrapper around an existing piece of technology. And that's one of the things that I want to kind of point out about innovation in financial services is a lot of the times when we think about innovation in our industry, we're borrowing from other industries because fundamentally we have a very simple business model. And a lot of times, some of the best innovations are simple marketing wrappers around existing ideas. So I want you to kind of think about, as we talk through this, what does the future of innovation in financial services look like? Because up until now, we've kind of been borrowing from other industries and applying it to our quite simple business model of buying money from people through deposits and selling money through loans. And I think in the future, and this is why I4 I think is really well poised for the time that it's launching, is we have some things that are going on in our industry that maybe accelerate the pace of innovation. When I reflect on some of the I3 projects that actually hit, they were, like on the surface, they were not fundamentally like the most creative things in the world. They were a reordering of processes. They were rethinking how we interpret regulations. They were sometimes just putting a simple marketing wrapper around an existing product or service to make it more interesting or exciting for people. The ones that had the most impact were the ones that were boring. And by boring, I mean they were focused in on internal operations to make the organization more efficient at the end of the day, both for the financial institution, the credit union, and the member, okay? So when we think about all of these types of applications within financial institutions, we need to think a little bit broader about that. So I'm going to borrow a little bit from what Molly shared with you. Has anyone ever seen this picture? This is a very famous picture. It's called the design squiggle. And it's from a Brit named Damien Newman, who used to work at Xerox PARC. I think I was in Cambridge. Xerox PARC was like the think tank for Xerox. They actually created a lot of the products that are commonplace today. Flat screen monitors, mouse devices. And he was one of the designers there. And this has been used pretty regularly in innovation circles to visually describe what the innovation process looks like. It is not a straight line process. That's the whole point of this, is that at the beginning of the research process, you have to do a lot of research and synthesizing of what's going on in the world, completely outside of the kinds of stuff that we do. We look at spreadsheets all the time. We try and sell products and services. We have to fundamentally get to what is the human need that we're trying to solve. And that's why it's called human-centered design, or some people call it design thinking, is that we need to spend a lot more time at the front end on the research side to really determine what is the real problem here that we're trying to solve. And then another part of the process that we'll talk about in a second is concepting and prototyping. This is something that we're not used to in this industry. In other industries, if you talk about manufacturing, before they set the tool die for a big factory run of a tractor, for example, they're going to prototype it and see what it looks like, see what it feels like, get feedback from the consumer. We tend not to do that in our industry. We tend to say, oh, I see a problem out there. I have a solution. Now I'm just going to implement it. We need to slow down the process in order to get better outcomes. And I've always enjoyed this because as you get further and further along the process, it actually gets closer and closer to what credit unions are really good at, which is kind of like the black and white, very practical, very logical types of things. But before it gets to that straight line, the squiggly line, it's pretty amorphous and it's kind of confusing, especially for an industry that's not used to this. And by the way, interrupt me whenever y'all want to.
That's way too simple for a
That's what's that?
Way too simple.
Way too.
Design process.
Oh yeah, absolutely. I would agree. And this is basically, this is the visualization, and under each of these steps of the design thinking process are a variety of sub-steps. And this is probably more along the lines of what you're talking about in terms of product development. Starting off with, and we're not going to spend a tremendous amount of time because I know the I4 teams are going to be taught this type of methodology. But the point is that this is an iterative cycle that you never stop. Like this is not, hey, step 1, step 2, step 3, step 4, step 5. This is, in this case, whoever designed this put this into an infinity symbol, which I think is very apt because it never ends. It's a knot that just never ends. But where you usually start is on the empathize side. You empathize with the end user, the end consumer. You try and identify who the target market is. Maybe it's internal, maybe it's an external, and if it's external, who are they? What are their characteristics? How do we segment those markets? And then Molly brought us through this how might we, kind of identifying the problem, really defining the problem, and then you kind of go into the typical stuff that you think about as it relates to innovation, which is ideation, generating ideas. You all generated a lot of ideas in a short amount of time, right? Just at your tables. Imagine if there was even more structure around that. Prototyping, we just talked about, and then being able to test and refine the product. This is a really high-level view of what that innovation process looks like, but I want you to get comfortable with it, and you may have seen this before. So just kind of really high-level stuff. And I think it's really quite important to kind of put it in the context of business, right? Because if we're just solving problems, single problems here, single problems there, there's no systematic thinking around it. And for all of the arguments that I have against big consulting firms, because I used to work in them, McKinsey is probably the biggest, and they tend to complicate things. But I feel like that they've done a good job of identifying what they call the 3 horizons model. So I'd encourage you to think about what this looks like in the context of your own organization and your industry as a whole. Because the 3 horizons are basically time-bound. First horizon is kind of looking at your mature business and saying, there's some things that we can incrementally fix here, right? The second horizon is around growing the business, okay? We have some unmet needs in the marketplace, or maybe this competitor is leaving and we need to take advantage of that, or there's a completely new market that we need to take advantage of. That's horizon 2. And then the horizon 3 is typically what we think of when we think about innovation, which is like this radical transformation of an industry. And by the way, those are very rare innovations that rarely either succeed or get to the market. So kind of a good rule of thumb, which this actually comes from Google, but in my experience with working with credit unions through the I3 program, is that we should be spending 70% of our time looking at incremental innovations. How can we build the better mousetrap at our credit union? How do we create more efficiencies at our organization? 20% should be focused in on that medium-term sustaining models, thinking about, are there opportunities that we are completely missing, but are still within the frame of what a traditional financial services organization looks like? I think on the sustaining side, artificial intelligence probably fits quite nicely into there because there's a lot of excitement about it, and I know the panel after us is going to talk about some of the applications. But we're at that point in the adoption curve of a new technology where we're getting really excited about it, and there's inflated expectations that it's going to solve every problem in the world. Maybe not, right? Maybe it is simply around sustaining the business for the long term. And then, this is the rarest part of innovation. Some of the best companies in the world do an exceptional job at this, but it's disruptive, right? It completely disrupts your own business. And, in fact, one of the leading thinkers around innovation is this guy named Clay Christensen from Harvard Business School. He's since passed away. One of his famous quotes is, "It's impossible to disrupt yourself," right? So basically, it's impossible for your organization to put your organization out of business. And that's what disruptive innovation is all about. So a lot of times, companies create completely different entities to fulfill that promise of disruptive innovation. I have a client in Arizona that has created a completely different sub-brand for their organization, focused in on the needs of gig economy workers, right? You guys know does that term translate well here? Like, people that are stitching together 5, 6 part-time jobs and trying to survive. They recognize that they were unable to create a solution within the bounds of a very traditional financial institution. So they needed to create a digital-only brand, and they call it, so the credit union's name is Vantage West. They're out in Tucson, Arizona, lovely place. And then they created this sub-brand called Hustle. Hustl, that is in the back office. It's run by this credit union and all that kind of stuff, but in terms of how they present themselves, the products that they develop, what they look like to the general public, it's very disruptive. So that's just kind of a model to think about. And then Molly, you had a bunch of great definitions. This is my definition. It's not. It doesn't roll off the tongue like yours. But when I think about innovation, I think of just new and novel ways to solve old, new, and novel problems. That's all it is, right? So hopefully that demystifies a lot about what innovation is and what innovation isn't. I'm going to pause there and see if there's any questions, comments, or pushback around any of the stuff that I just shared with you about what is innovation. What do you think? What do you think, Karen?
I agree with everything.
You agree with everything I said? That's the first time she's ever said that to me. Yeah, so I mean, a lot of this was born out of a lot of experience. Yeah, we got an expert here. Yeah.
So great presentation, by the way. Thank you very much.
Yeah.
I just had a question on, do the problems always have to be new and novel? So if you think about where credit unions are at the moment, and if you characterize them as a mature business, then some of the problems that they are facing into may have been problems that have been around for quite some time.
Yeah.
And one of the problems is that perhaps the Berman platform isn't created, which says, look, there's a risk here to doing nothing.
Yeah.
right? Because if you do nothing, this pervasive issue that you've faced for ages will become your default future, and then that will bring your house down, right?
Yeah.
I'm sorry,
No, you're absolutely right.
hyperbole, but,
Yeah.
but the point is that it's an old problem,
Yeah.
and it has to be solved in a way that brings you out of that problematic scenario and move forward. And it could be solved low tech as opposed to high tech.
Totally, yeah. Yeah, and that's why I say old, new, and novel. Because I totally agree. A lot of the problems that we're trying to solve, we've tried to solve before through different methods, and now maybe, and this is why I think artificial intelligence is, by the way, I'm not an AI booster, like where I think it's gonna solve all the world's problems. I've got a skeptical side as well. But AI potentially has the power to solve some of these old problems that we have. And that example that I gave you about the credit union that created the CUSO to hire the white shoe public relations firm so that credit unions could get covered in the national media, that's an old problem, right? That is an old problem. And it's not necessarily a super creative solution, but it's just, hey, this is a new way of doing it. Rather than hiring a PR firm individually, let's spread this cost around 30 institutions, but absolutely agree. I'm also working with, there's another CUSO I'm working with that is focused in on something that you all do exceptionally well, which is workplace lending, right? So you go to the HR, the human resources function at your at the organization that, like if you're an industrial credit union, you would go to the human resource function and ask for a loan, right? That's kind of a traditional way of issuing short-term small dollar loans. We've gotten away from that in the States. So that's still a problem that exists because we have, much like you, we have payday lenders that charge outrageous fees. And that's where people go if they blow a tire or, they blow a head gasket in their automobile. Now they're creating this new innovation around this old problem of, hey, people need short-term lending at an affordable rate that credit unions used to do. But the innovation for them is that they've figured out an API between the payroll systems and the credit union's loan origination systems, so that if an employee goes into the human resources department, they say, I need a loan, there's no underwriting. If you're an employee in good standing with 6 months, you automatically qualify for a $2,000 loan at 5% interest. And by the way, we're gonna put it in your next paycheck. And by the way, your money's gonna be taken out periodically over the next 12 months for that loan. Not a new idea, but it's a new conception of how that might be applied. Yeah, great point. Cool. Okay, so then the question is why? I think we know this, but just understanding the context in which we're all operating. I've got a few concepts here. Some of them may hit home to you, others maybe less so. Paul this morning talked about, for Great Britain, what does our market share look like? It's really low. And by the way, even though we have $2.4 trillion in assets in the US, that's equivalent to one Bank of America, one of our big national banks, across 4,000 something institutions. We have a big country, 360 million people, right? We're about, depending on what you're talking about, our market share, depending on whether you're talking, what product set you're talking about, we have between 6 and 18% market share in the market, depending on what product you're looking at. So in order to survive, we need to grow, because growth means we have more resources to meet the increasing needs of consumers. So innovation is a potential solution to that. The people that we compete against, and I have this argument all the time with the credit unions that I work with. I ask them who their main competitor is, and they invariably talk about the credit union or the community bank down the street. And the numbers do not prove that out. In fact, the top 100 financial institutions in my market in the United States control 75% of the market. So chances are your members, even if they don't have access to a local branch of a big national organization, chances are your competitors are going to be these big institutions. And by the way, some of these institutions have outrageous amounts of capital to spend and invest in marketing, in product innovation, in technology, et cetera, et cetera. I think one of the reasons that we need to do innovation is we haven't fully leveraged our cooperative ownership structure. There's some magic here. I think to date, most credit union systems around the world have not fully leveraged this advantage that we have. And I'm going to end the talk in 41-ish minutes with a story about the perfect example of what this might look like. Because the power of collaboration, and Molly, I'm glad that you put that out there as one of the table topics, the power of collaboration can be very profound. Smaller institutions pooling their resources together to solve a problem is something that is distinct and different in financial institutions. You know, imagine two high street banks collaborating on something. It's not going to happen in this country. Consumers, you know, especially, I would say, especially since the end of the pandemic, their needs have accelerated. They demand much more. They expect, from a digital perspective particularly, to have the smoothest, frictionless experience in the world, and they could care less about all the regulations that you have to abide by. So that's another reason for innovation. We had this moat around our business model, right? We had this moat around our business model, which is defined as all of the regulations that sometimes we love, sometimes we hate. The moat is kind of getting a little shallow, right? And our little castle in the middle of that moat is a little bit more vulnerable. So we need to be more reactive to what's going on in the marketplace. The industry is consolidating, so there's less of us. So survivors need to survive. I think ESG has, like, we are the true manifestation based on our ownership structure and our legacy to truly take ESG principles and put them into practice in financial services in a very, very real way. When you look at some of the bigger players that are doing this, I think in my analysis, it's a bit, in some cases, it's a bit of greenwashing. In other cases, it's a lot of greenwashing. And credit unions have that mentality to do that. Just want to spend a few seconds on changes to the quote-unquote economy. And by economy, I just mean all aspects of society that are going to be potentially impacted by artificial intelligence. I am not a technologist, but I'm more of a strategist, and I can see how this is going to be impacting all aspects of our lives. I know in the part of the country where I live, I live in a city, but outside the city, which is about 20 minutes away, you've got cows until you get to, you can go all the way past Canada and to the North Pole. There's not many people where I live. There's huge arguments about major power plants being built for data centers in these rural areas and taking all of the water and resources. So when I say economy, I mean kind of society. So with that, even though I've been ragging on McKinsey and some of the big companies, I did want to point this out. They come out with a periodic banking trends thing. It's totally free, which is usually not what McKinsey does. They always put things in a 2x2 matrix. So just so you know. This is a very confusing chart, but let me just kind of walk through it really quickly because I think it's pretty profound. The ideas that are coded in pink are focused in on operational efficiency, okay? The further down you go means that's where most of the fintechs are involved, and then if you go further up, that means that's where most of the incumbents or financial institutions are involved. You can see that the pink is around operational efficiency. So most of the AI applications that are happening today are focused in on operational efficiency plays rather than revenue plays. So I'm not sure what that exactly means, but this is important context for when we think about innovation and what we should be focusing in on. Because each of those circles, you know, the bigger the circle gets means, hey, there's more projects. And the one that's the largest that they've identified is what they call AI-powered conversational banking assistance is number 2, and number 1 is an AI-driven financial services platform. That is business speak for replacing human beings. That's essentially what it is. They're trying to create a AI-powered platform to make financial institutions essentially automated, both in the back office from an efficiency play, but eventually to the consumer side. And then you can see other things here. I know that the panel is going to be talking a little bit about AI. I think that this is very profound from an innovation perspective. When we talk about AI, does anyone have any specific stories about, hey, we are experimenting with AI, we've had some success, and I'd love to share it with people? Does anyone have that kind of story available from their institution, or is it a little bit too early for you right now? The volume went down. We'd love to talk about disposable nappies, but we don't want to talk about AI. Anything that's going on? Yeah.
There's heights where there's investment in AI technology platforms.
We got a mic coming for you. Just hold on one sec so everyone can hear. Thanks. Thanks, Brigitte.
Hi, I've observed there's quite a lot of investment in the AI platform technology.
Yeah.
For example, in the legal sector, where a lot of law firms have plugged in millions just to create this platform.
Yeah.
And I've dealt with approaches where those firms are now going bust because there's so much investment in them and they've not got future funding to take that off, and basically all that investment's worthless.
Yeah.
Because there's no other buyer that's willing to take on the investment that's made in that platform.
Yeah. Yeah, I think that's a great example. And are you in the legal profession? Or?
I'm not, no.
Okay,
But,
yeah. Yeah.
I'm an insolvency practitioner, so query came to me to see if I could find a solution.
Yeah, yeah, because it's quite interesting. There was an MIT study recently, which I heard. So if you want to listen to an AI skeptic, I think it's important to listen to both the boosters and the skeptics, because we're at this point in time where there's a lot of uncertainty about how all of this is going to play out. There's tons of money being flown into there. But there's this AI skeptic, he's a Brit, his name is Ed Zitron. If you don't like swearing, don't listen to him. And if you don't like 3-hour podcasts of swearing, don't listen to him. But he's reported that there was an MIT study that said of enterprise-level AI experiments over the past, I think it was 2 years, that have been conducted in the corporate, so we're talking about big corporations, 90% of them did not meet their intended outcomes, right? Zitron said that then MIT was forced to kind of take that study down, but thanks to the wonderful internet, it's on the Internet Archive, and you can still find it. I think that's kind of an issue that's going on right now, is that there's a lot of exciting experimentation, but we're still at the very beginning stages. I knew you were gonna say something. Let's do it. All right. No, this is great.
No, only because I've read the report. So yeah, what it's very much, and you're absolutely right, Ed Zitron's brilliant, everybody should listen to him. It says there's only 5% of productivity gains have been realised.
5%.
And one of the things we're going to talk about in a minute is that, but a lot of that isn't actually the technology. A lot of that is the people and why are we doing this, or are we just playing with AI as a fun toy?
Yeah, that's great. And I can't wait to hear from you about all the work that you're doing. So, and I don't want to spend too much time here, but I just wanted to stage this as saying there's a lot of activity going on. There is a tremendous amount of money being flown into the AI sector, and this is probably a source of a lot of future innovation. Today, there's exciting applications, for your personal side of things, maybe from a micro level, just to make yourself a little bit more efficient. Somebody shared like this idea of just being able to control the AI was able to control their calendar to make it more efficient. Those types of applications are interesting, but the enterprise-wide stuff is just starting. So that's just a kind of a context for, okay, how do we approach innovation? And I like models, and I know I just ragged on McKinsey for putting everything in a 2x2 matrix, so I'm going to put something in a 2x2 matrix. This comes from a study. You can download this study. This was conducted in 2019, and actually 2018. And I'm proud to say that because a lot of the things that we talked about at Feline we were trying to predict, like, what does the credit union of the 21st century look like? This was not the US, this was kind of worldwide. Community-based financial institutions, what does the 21st century look like? And we identified two key uncertainties. One was, hey, from a consumer perspective, are they going to interact heavily on the top side, high-touch interaction, or is it going to be low-touch interaction, right? And hey, it's dependent on what consumer segment you're talking about. And then on the x-axis, is the credit union going to be one of many providers, or is the credit union going to be your personal financial provider, kind of like our mindset right now? So if you kind of look at each of those uncertainties and start to map things out, we have to predict which future we think is going to play out. So in the interest of time, I don't want you to do this at your table, but I want to hear your opinions. So when we think about a high-touch credit union as your personal financial provider, that's what we called relationship banking. If you move down, if you go to a low-level interaction, but your credit union is still at the center of your financial life, that's automated banking. Now, as we get into the low level of interaction from a consumer perspective and from a financial institution perspective from a traditional sense, like, hey, branches are going to go by the wayside, and then the credit union is one of many programs or one of many providers, we have this concept of ambient banking. And then finally, we have, hey, credit union is one of many providers, but it's still high touch. That's this concept of concierge banking. And don't conflate concierge banking with like really, really rich people. Just think about it in terms of, hey, there's going to be a portal of a variety of providers, but the credit union is probably going to still be at the center of that and is going to be able to shuttle you from fintech to fintech. So when you think about into the future, and by into the future I mean the next 5 to 10 years, where do you think credit unions in your locale would fit? Like what model do you think fits? Is it relationship banking, automated banking, ambient banking, and concierge banking? Where does your organization fit for tomorrow? What do you think? This is when the blood sugar is starting to drop precipitously. What do you think? Okay, Nick, what do you got? In the future.
So I would say for British credit unions at the moment, for the foreseeable future, we have to be one of many providers. We're not in a position yet to be at the center of people. We've got a, in banking terms, you talk about share of wallet. Mm-hmm. We just don't have the products to own all of that. Okay. So I would say in any sort of short to medium term, we're going to be one of many. You're going to be one of many. So you think you'll be in the concierge set where it's just like, they're going to come to us for some things, but they're going to go to other providers for other things. Yeah, and I think I can see something in that concierge model about that community network, the community hub, mm-hmm. kind of community facilitator, kind of community connector thing. Yeah. So yeah, that's where I think certainly British credit unions might be. Okay. Anybody from Ireland want to opine on where you think the industry's going? Where would that sit? It's the first time Irish people haven't spoken. My wife's Irish, so yeah. Yeah, go ahead, Dave. Yeah.
One of the credit unions will sit in the frame of being community neighbours.
Yeah.
Increasingly, from our perspective, we will be the latter. We will be increasingly seeing that financial services is just a medium by which we serve our members of the community. So increasingly, our direction channel will be more into the social and environmental space, and that will grow our relevance for our members, grow our relevance with our community, further embed the credit union into that space. But also means that we have to seek new forms of revenue, generate new income.
Yeah.
So the whole area of, where, for instance, joint financial literacy, and we traditionally run that under our own steam, mature our own resources. Then we know how to do that. We have to be willing and able to get revenue, whether that, and obvious revenue streams could be from government departments or whatever. So I think there's a divergence coming in Ireland. Credit unions sometimes will go bankrupt, and credit unions will become more community
Yeah. So maybe in that relationship banking side of things, where it's like we're kind of the center, and we're going to remain high touch in this world. Yeah, that's great. That's great. What do you think? Like, you know, Paul put up the our Ireland. David, where's David? Where's David? Did he take off? He took off. It's Friday, right? Come on. He showed from a generational perspective. So think about Gen Z today, right? Gen Z is ranging from 28 to teens, approximately. Think about what they want when they get to that age of 40. What kind of banking relationship do you think that they will demand? Is it going to be relationship, concierge, ambient, or automated? Just, you think it's going to be automated? Yeah.
It's going to be a mix of automated and concierge. That's what I would call a revenue model, where they do 40% of the things themselves.
Yeah.
And then the remaining are services that are plugged into their core app. So
Yeah.
as far as I'm concerned, as a customer, it's Revenue doing everything.
Yeah.
But in the back end, it would be various providers doing various things.
Yeah, yeah. I think that's a great point. You know, because situationally, people are going to probably fit in different parts based on their needs. So I mean, this is just a framework to kind of simplify things. But that's a great perspective. Any thoughts? Yeah. What do you got, Tony?
That's great,
Yeah.
but it virtually assumes that your customers are homogeneous, and they're not. We've got a range of financial capability.
Yeah.
There are those that will always go to, some fancy concierge personal banking because that's where to invest their couple of million quid.
Yeah.
And there are others where the washing machine goes fut and they're buggered.
Yeah. You need to name all of these segments for us in the future. I love that. I love that. Yeah, no, that's absolutely right. And that is one of the, I think, the important things as we think about innovation. We need to identify the target market, and that's
Third dimension effect.
yeah, it is a third dimension. Yeah. Oof, we're getting into very deep stuff. We're getting into very deep stuff. Yeah, but you know this and quite. Yeah, I'll get you a second. This was made to just kind of simplify and just kind of perceive where we might go in the future. Yeah.
Just looking at what you've got there, it strikes me that many connectors are going to be in a journey. And so probably young consumers are going to be the top part ideally because we're still learning what it is to be a financial consumer.
Yeah.
And I can see different credit union staking strategies, some moving towards much more concierge services, others probably trying to move down, get scale advantages, move down to automated banking.
Yeah.
My guess is that no one really wants to be an ambient bank.
Yeah.
My own credit union, that's where we are.
Yeah. Really?
Yeah. And I don't want to go into the whole story, but what is this AI? We barely have a website.
Yeah. You're leapfrogging technologies now, right? Yeah, so let me just give you context for examples of how I think today's organizations are fitting in. And if you think about, okay, these organizations, how are they gonna, like if they've made the decision that this is the target market that we want to serve, and these are the capabilities that we have. So we're deciding, and you know, this is fairly artificial. We've decided to fit into one of these buckets. It's quite helpful to figure out like, where you think the future is going from an innovation perspective, so that you can design for that potential future. It's not about predicting the future. It's just trying to create a bounded reality. So when we think about this concierge banking, you can read the descriptions here. I think, and you know, I know that JP Morgan Chase is not big over here, but they're one of the largest financial institutions of the world. And some recent developments I think are quite interesting is that, you know, most financial institutions now partner with fintechs for a variety of reasons, both consumer facing and back office type of stuff. JP Morgan Chase was the first large institution to recently announce that they were going to charge fintechs the honor to have access to their members. okay? So to me, it does kind of portend, when I kind of put myself in their shoes 3, 5, 10 years into the future, is that they're trying to be the portal for all financial services. And even if they do have a budget of $12 billion a year, which is an actual fact and figure for their internal technology projects, they recognize and realize that they need to partner with other organizations for specific needs. They're more of a facilitator. And in fact, from a retail perspective, they have fewer number of customers than our largest neobank in the United States, which is called Chime. Chime has 38 million active retail consumers. Chase makes most of its money with institutional investors and very, very, very rich people. But this is kind of the model that they're going towards is one where they are a facilitator. And for each of these, I kind of put, hey, what are some of the key success factors? That's what KSF stands for. It's going to be API integration, right? So if I've got this portal with all of these providers, I want to give the consumer, the end consumer, a cohesive experience. So we better get really good at API integration, marketing, partnership management, and relationship management. Just to kind of give you a sense of how these might play out. To me, this is probably the most obvious answer for most credit unions. It's what I think a lot of people would be considered like the old-fashioned model. It's like you have a financial institution, that's your primary financial institution, and they have a deep understanding of our needs and wants, and it's pretty distinct. A cooperative bank, like from my perspective, I know that there's a bunch of cooperative bank people here, with the ethical-led, customer-led ethical policy is kind of an example of how that manifests. Within the US, one of my clients, this is a smaller financial institution based in Detroit. They have decided to move from a broad community base to a targeted market type of audience. And their target market are women, okay? 50% of the population. And focusing on the needs of women, not to the exclusion of dudes, okay? They still serve guys, but they are heavily focused in on the needs of women, and specifically, they want to be the one financial institution that actually calls out the dark moments in people's lives. So when you kind of get into this relationship banking thing, you can't just say, oh, we're in Detroit, Michigan, right? That's a big metro area, and yeah, that's narrow, that's specific, but what makes you different? Like in order to do relationship banking, if you're an industrial credit union, I think that that's amazing because you have a built-in segment that has very specific needs and you can create products and services around it. So what Community Financial, before the current CEO came on board, some of you know her name is Tansley Stearns, before that, they were just like, hey, we're going to serve these 10 counties around the Detroit metro area, and that is our target market. What do those counties have in common? Like central Detroit is almost 100% African American and not very rich. And then you go out to the outlying communities, almost exclusively white and very rich. So like, what do these have to do in common? So they're going down the path of saying, we are targeting women and women's needs in financial services, and we're gonna go a level deeper by addressing some of the really uncomfortable things that women have to deal with. Hey, we make all of the financial decisions and we take care of our kids. What are some of the needs? They're trying to figure that out. They looked at, they're one of the 3 credit unions across the US that's doing a cancer care pilot program, where if a member of the credit union has a diagnosis of a stage 4 cancer, they're going to wipe out all of their debt. Okay. They also have a domestic violence recovery loan. 3/4 of women in the United States are victims of domestic violence, and women that are victims of domestic violence, 90% of them also have economic abuse associated with that relationship. So they're creating a loan product around that. So you can see it's getting very, very specific. So if you want to go in that relationship management or that relationship banking type of model, you got to get very specific. If you're interested in talking a little bit more about them, I think they're going to be a fascinating story. Ambient banking. This one is like the best way I can describe it is banking will feel like going in an Uber ride. How many people have gone on an Uber ride? Hopefully, yeah. There's no money that passes hands. It's ambient, right? You just pass through, you go in, you're out, you've paid, you figured it out. there's a lot of technology out there that is feeling like this. The Apple Pay, Apple Card, it's not quite ambient because you do have to actually the huge effort of taking out your phone and pushing that button on the right-hand side 2 times and then doing the Face ID. That's just kind of the beginning of what that might look like. And I raise Apple as an example because I know a lot of people have access to them, but Starbucks is one of the largest banks that we've never heard of. They have $2 billion on deposit in their app, right? Because people preload money onto their app and get their caffeine fix. And every day, Starbucks has a $2 billion interest-free loan from consumers. And that's one of these concepts of embedded finance. More and more organizations are getting into this world of embedding finance into non-finance related activities. And hey, $2 billion is a lot of money, but it's not going to take a tremendous amount of business away from me. But if more and more organizations have that mindset, imagine if Amazon starts getting into banking, they're capturing a pretty large share of people's purchasing power. I think that's an interesting example around ambient banking. And then finally, automated. These are the neobanks. I know that Monzo, Revolut, Bunk are really popular over in this part of the world. In our part of the world, Chime is really popular. Just think about it in the future as agentic AI, meaning that there's an AI agent that's actually doing the business for you. They're analyzing your spending habits. They're analyzing how much money's coming in, how much money's going out, and then they act on your behalf. This is something that's not quite ready for prime time yet, but I would watch players like this that will start getting into automated banking. So I just want to kind of give you that framework when we're thinking about innovation and solving problems. Number one, we have to decide who we're serving and what kind of models we have going forward. And hopefully this was helpful. I want to close with a few lessons learned, and then the last thing is like the so what of all of this. So through all this work that I've been doing with credit unions, these are kind of the lessons learned. I'm not going to go through all of them, but I do want to talk about a few things. The fourth bullet point of this concept of corporate antibodies. What do you think that means? What's that?
All the reasons why we can't do something.
Yeah. You got to keep the corporate antibodies away at the beginning of this of an innovation process. And when we do the I4 is a perfect sandbox to try and figure out how do we play with ideas without implementing ideas right away. Okay? So one of the things that is an absolute killer, especially in financial services, but across many industries, are the corporate antibodies. The corporate antibodies, and I'm not picking on you because this is your role, but it tends to be people on the regulatory side of things or the finance side of things, or sometimes the operations side of things. You come up with a new creative idea that kind of pushes the bounds of what's possible, and there's always going to be reasons why it doesn't work. So you need those people, but not at the beginning stages of it. The 2 bullet points down, constraints. Molly put us through a design sprint. And Molly, it was like 50 minutes. We had about 50 minutes. You generated however many ideas are at this table times probably 3 or 4. Constraints are really good in innovation. So if you think, oh my gosh, we're a small institution, we don't have the resources, we don't have the capacity to deal with these things, it's actually a good thing from an innovation perspective because it forces you to be a lot more creative than, say, a JP Morgan Chase, which has $12 billion a year to spend on technology. Second to last thing, innovation, if it's a priority, you got to resource it. I can't tell you how many times I go into credit unions that say, we're a very innovative shop, we value innovation. So my next question is, well, how much is in the innovation budget? And then people's faces get red. It's like, oh, we don't have any money budgeted for it, but we care about innovation. So if it's really a priority, you got to resource it. And then at the end of the day, this is not about creating new ideas or doing fancy creative stuff. It's about implementation. That's the goal. That's the goal of innovation. So I really encourage you to kind of think through all of these, but especially the ones that I highlighted. And then the big so what, as you go forward, and like what are some of the things that you can take back on Monday morning? Focus in on boring innovations, especially if you're just beginning and you don't have a history of working with innovation. Think subtractive rather than additive. See ya. Take care. Thanks for everything. Think subtractive, taking things away rather than adding things. The analogy that I love to use is like we're coming up on Christmas time. A lot of people put up Christmas trees. If you keep on putting ornaments on the Christmas tree and tinsel on the Christmas tree, it's going to start to fall over, right? And we can all think of situations in our own organizations where we keep on adding things, but we don't take anything away. I would really encourage you, as you go through some of these innovation programs and innovation experiences, to think subtractive. And that actually opens up opportunities for you to create more value for you and the members. And then, you know, we touched briefly on this on the process. The innovation process always needs to start with the end consumer in mind, whether that's somebody that's working at your credit union or some segment of your population. Always have that person in mind. You're not solving problems for your institution, you're solving problems for people. You're solving problems for people. And then the last thing, and I'll end this with like a quick story of innovation and how it can be very powerful in the cooperative sector. We need to act like a cooperative sector. The first time I heard the term that the cooperative movement is not very cooperative and doesn't move very fast was at one of these events. It's just such a great turn of phrase that I love it. When we collaborate as small institutions in an industry dominated by very large, highly capitalized players, we're always at a disadvantage from a variety of perspectives. But if we collaborate, that is our superpower. Our structure is our potential secret sauce. There's an organization in the US, I may have talked about this at previous conferences. They used to be called Credit Union Direct Lending. They went by the really amazing acronym of CUDL, C-U-D-L. It's like so sweet. They rebrand themselves to Origence. And essentially what they are is a CUSO, so it's owned by, I think, 200 or 300 credit unions. About 1,000 credit unions are on the platform that basically just focuses in, or primarily focuses in, on automobile lending. It's our #1 product. We have 18% market share in the United States, credit unions, 18% market share of auto loans. What Origence does is that this CUSO focuses almost exclusively on the automobile lending process, and they create relationships with dealers across the country, automobile dealers across the country, such that when you as a consumer go into an automobile dealership, the dealer will serve up a loan from a local credit union. And if you have a preferred credit union, you can say, hey, can you give me XYZ credit union? So that the loan is underwritten right at the dealership, so that when you purchase the car, all the financing is done and the credit union doesn't really have to be involved in it at all. It's kind of a cool innovation. It started with one credit union out in California, and the woman who started it just recently retired as the head of the California Credit Union Association, and then it grew up into this organization. The innovation is just that, right? They've collaborated on a high-value product that means a lot to a lot of people. In the United States, cars are pretty much necessary, maybe with the exception of New York City and Chicago, Illinois. You need a car to live in the United States. So it's a need. The end consumer need is there. Now, if credit unions were to individually try and identify, hey, this dealer or that dealer, it would be much more inefficient. So with this relationship with 1,000 credit unions on this platform across the country, in the mindset of consumers, they know if they go into a dealer, they know they're going to get a good deal from their credit union, even if they don't know what a credit union is. So at the end of the day, what do the numbers look like? Yeah, we have 18% market share, and the bulk of that is through this Origence CUSO. And if you were to collectively look at all of the loans that Origence originates, you can see where their name came from, they're the single largest automobile lender in the entire United States. They beat the big national banks. They beat the captive finance companies. Okay, so that's kind of like the end game from all of this is focusing in on the consumer, collaborate for the end goal of being a really major player in the financial services industry, much larger than we could be individually. So that's my last point. I encourage you to keep in touch. I appreciate you. I think we got 6 minutes left, but I know that we wanted to get the panel up here before. But I really want to thank everyone for your participation, hospitality, and I thank you so much. So.
Thank you, George. Thank you, George. As always, an incredibly stimulating presentation. Loads of food for thought. I'm thinking as George is talking, every slide, oh my goodness, how are we going to fit this into our vision project? I know some people have got to go. They've got transport challenges. So if you've got to go, that's fine. Let's keep if we can allow everybody else to listen in to our fantastic panel. Our panel chair's train has just been cancelled, so she's got to get away really promptly, like 2:45. I think you've got to go about 4:45, unfortunately. So we've just got... Don't worry. So we've got half an hour, and maybe a little bit more. How long have we got till 2:45, guys? You're going to put the timer on, okay. So we've got till 2:45.
We got mic?
Microphones. I take 3.
Thank you.
I'm going to let the...
At the back. Is that you, Mark?
Yeah.
Is that Mark?
Can you hear up at the back? Vicky's going to test this out.
How's that at the back? Can everybody hear at the back?
Hello, hello.
Yeah, all good.
Okay, that's
Thank
great.
you.
So, all right, I mean, we'll just what I think. I'm really looking forward to this. We have 3 entrepreneurs who are all going to talk about some of the ideas, something about how you generate innovation. That's what they're doing. That's what they're doing with their propositions. That's what they've done with their businesses. All come from different backgrounds into a place where they're innovating in our sector. So, and we're not going to talk so much about solution. We're going to talk about innovation. I'll leave it to these guys to introduce themselves.
Thank you very much, Nick. So thank you very much for all of you who've been able to stay. Last session of the day, woohoo!
Got the graveyard shift, everyone.
I know. And I know that you're not going to believe this coming off the back of hearing George speak, but this is the best session of the day. The reason I feel quite confident to say that is because we can take all of the best bits from the amazing content that we've had today and bring that out in what we're about to deliver to you. So my name's Vicky Zuiderent. I am a risk and compliance consultant. I'm an ex-fintech founder. I'm happy to explain about the X another time, but I do have to rush off on my train after. But I'm also a board member of Capital Credit Union as well. I'm delighted to be hosting this session because I do feel what this is going to help deliver is those practical tips that you can take away. So it genuinely should be one of the most valuable elements of today because you can take everything that you've heard about innovation today and start to deliver this on Monday to George's point as well. So I am joined by these 2 incredible panelists. We really are very lucky to have them with us. We have Josh Tasker, give everyone a wave, and Jen Lothian. And could you please put your hands together in 2 seconds for Jen, who just yesterday, day before, won an award from Alaka Bank for Tech Entrepreneur of the Year. So well done, Jen. So Josh is the CEO and co-founder of Sync Savings, the UK's first dedicated payroll savings provider. Josh's background is in legal compliance and innovation at Monzo and Octopus, and she is passionate about building financial resilience and making savings simple and accessible. Jen has worked for over 25 years across large-scale transformation and innovation in AI and data, initially in the army for a decade, another conversation to be had there, and then 15 years in banking and finance. Jen founded Data Wallet to fundamentally reimagine how data could be accessed, and in doing so, to remove the barriers for members to access the best products and services. So I think it's fair to say through both of their organisations, the costs and efficiencies that have been brought to members is profound. So I would highly encourage you in the spirit of collaboration and just bringing in the expertise from across industries to contact them after this and find out how they can support your organisation. So please do that. And both of them have said that they would be delighted to have conversations with you. So the session today, as Nick alluded to, what we really want to do is build on much of the content from today about how to build an innovation culture and see that in practice, but also to talk about some of the risks and some of the practical elements that come with it. And whilst I'm really keen that we do get your experience and draw that out, what's really important for us, I think, is to apply that to your own organisations. So that's what we're really looking to do today. So I think I'm going to start by setting the scene. And Jen, I have teed you up for this, so I'm going to come to you first. How, and perhaps more importantly, why do you intentionally build a culture of innovation at Data Wallet?
Yeah, absolutely. And I think it's the same for all organisations. So the only constant in life is change. And so if you stand still, you will be left behind. And I think a lot of the statistics that were shown first thing on this morning kind of talk to some of that. And it doesn't mean that you need to change all the good learnings that you've got and everything that works today. It's about continuously adapting, continuously improving, and really leveraging the opportunities that many changes, be it regulatory, technology, or people, drive, so that you can continually reimagine what you're offering and continually offer better services to your members. How you do it is another question. I'm going to dissect innovation and change. My background is in a lot of sort of digital and data and technology change. You can't innovate if you can't manage change. So what I've heard a lot today that's been really interesting is when people have tried to implement technology and it's not gone to plan. And so there's some wounds, there's some bruises there. That is not unique to credit unions. I have worked across insurance, private equity, investment banking, incredibly well-funded organisations, and they are terrible at change, partly because a lot of them are so big, and I've never been so enthusiastic about a sector as the credit union space. But before we even get to the innovation, you have to find a way to get comfortable with change. And a lot of that, and I'll take a pause, but a lot of that is getting those basic foundations of understanding risk appetite, understanding what skills you need. If you're an HR director, you're not implementing technology very well because you haven't spent decades doing it. And so it's looking at that whole gambit of the environment you need on a very practical level, getting the foundation right, and then you can really look to innovation.
Picking up that point then about foundations there, Joss, sorry. How does this apply for you at Sync, and what does innovation mean for you in your organisation?
Yeah, we founded the business because we had an idea that we thought was quite innovative, and it was based on our mission. So for us, it's really like, we are a mission-driven organisation. We want to help everyone to save more. And so then it's a question of, well, how do we reach as many people as efficiently as possible? And we think that's the payroll angle is really interesting. So we're always, I suppose we're, as an organisation that does not yet actually realistically have product market fit, we have to keep changing until we find it. And I think that's maybe, it's some really interesting synergies with the credit union space as well. We're all looking for product market fit at the end of the day, aren't we? We're looking at, and that means we're looking at what product can we sell someone that someone wants to buy? And until you found that, you shouldn't stand still. And that's really, most startups fail because they don't find product market fit. So I suppose it's that mentality of like, how do we keep changing until we're finding the product that somebody really wants? And we always have to be guided by who we're trying to sell to, what exactly are their needs, and how do we change our product to meet the needs of the people that are buying it? And so that starts with, okay, what is the most effective distribution channel for cash savings? Where are the barriers? I worked really hard to get the regulator to issue the statement that says you can do simplified due diligence, which basically means that KYC goes away. That allows all of us to auto-enroll whole organisations to payroll savings and use that language. So I think there's loads of, but I think just having that relentless focus on getting product market fit right is the key from my perspective. And there's loads of things that I want to do, and I hope that everyone else here we can work together on in terms of unlocking barriers to mass adoption of payroll savings, for example, which is my passion. Where to help us to reach that product market fit, because as a product, payroll savings doesn't work at scale yet.
Sure. Yeah, and I think what's interesting about what you're saying there is the principles by which both of you actually have built your organisations and built them up is the same as the kind of principles that we're looking to develop here, but it is driven by innovation, right? And it is driven by having that culture. So I'm just, in terms of like a leadership style, I guess, so change management, Jen, you alluded to change, like what do you recommend, or how would you translate that into, I guess, credit union leadership as well? What are the fundamentals of leadership that are needed to create an innovation culture? Joss, do you want to carry on with that?
Yeah, sure. I think a lot of it about leadership, and from my own personal perspective, and it's wonderful to have other amazing female leaders around, because I think female leadership's different. It feels different, and it's been an interesting personal journey for me to kind of feel my way into that and do leadership in a way that feels really authentic to me as a human being. But more broadly, in terms of leadership around innovation, I'm really lucky I've been on the management team of Octopus, on the early days energy side and later in the electric car part, and also Monzo. And I think the culture is really, really important. It has to come from leadership. And one of the most important aspects of leadership, I think, is enabling people to get in their speedboat, drive as fast as they want, and saying, you can mess up and I will give you air cover. And that's something that actually Paul and I had a really interesting conversation about, and it was wonderful to kind of loop back to your amazing message at the beginning of the day, which is leadership isn't just about protecting that Ming vase. Leadership, true leadership to me, is saying to my team, get in your speedboats, go as fast as you can. I will give you air cover, you are safe, you will make mistakes, that's okay. And we make mistakes all day, every day, but we've hopefully fixed them really rapidly, and we're really passionate about doing that. But I think when you're moving fast and you're innovating, it's not always going to work out. Mm-hmm. A lot of innovation fails. And that's okay, because there's so much learning in that. And next time you'll do better. But I think that's sort of that culture of, like, not necessarily move fast and break stuff, which is very Silicon Valley, but more, we're going to try it. We're going to do it safely, but it's okay. It's okay if it goes wrong.
So I'm going to bring in the R word, which risk. There's plenty of R words, because Jen, I know that will be something that you'll want to draw out in. But if we can maybe segue also into moving on to how to generate and implement innovation when we're thinking about risk as well. So I guess in terms of that, moving from ideas to action and being practical about it with that leadership culture, but embedding risk as well, could you maybe draw all that together in terms of how you embed this innovative culture?
Yeah, so I think about this a lot, and a lot of the way that I think about risk stems from when I was in the military. So I served in frontline Afghanistan when it was really kinetic. I was a captain in the artillery. I needed to make sure that my rounds landed in the right place. So everything I do, I have a very high risk tolerance, but a very acute appreciation of it. Risk itself is completely an anomalous concept. Really what risk is impact and probability. And I think it can become a lot less frightening, because I think if you're listening to Joss talk, you're like, the Ming vase is broken, all of this, hope that we've been sort of historical, amazing culture and support that we bought, we're not going to do that. But actually, if you break it down into its constituent parts, you really can. So first of all, I always break it down into impact and probability. So if something is going to be really terrible, the impact, then even if the probability is low, you probably don't want to do it. But even if there's a really high chance that something's going to go wrong, but the impact is really low, you can still give it a go, because it might go right. So the first thing I ever do is I never let people talk to me about risk. I make people talk to me about impact and probability. And then I break the risk down, or each of those into two halves again. And there's good risk and there's bad risks. And in my organizations, and I've run lots of teams in lots of places, I've always said, I really want you to imagine a whiteboard. And on one side of the whiteboard are good risks. They're the things that Joss is alluding to. Like, we tried to do this system change, it didn't work, but you can back out of it. And you want a really long list of good risks. The bad risks are when you leave a member not able to access a loan because there's been some sort of failure and that really impacts somebody's life and that is a bad outcome. It's when you do something that you know in your gut is morally wrong. Like, they are fireable offences and they're on the bad list. So breaking it down to its component parts, I think, starts to make the whole thing feel a little less overwhelming.
Great. So, can you share a time when it's gone wrong? Where you've done something that didn't work out under the guise of innovation, like trying to be innovative, but it did crack a Ming vase, let's say.
I think for us, so within my current business, there isn't really, and I think this was spoken about earlier, and why fintechs have an advantage is because we don't have any of that legacy, that culture to take care of. We haven't got a Ming vase. We've maybe got like a 4-year-old clay pot. And if you break it, you can kind of make it again. So that is the kind of the difference. But what I would say is that the Ming vase, if it's kept in a safe, gathering dust, has actually no intrinsic value. And actually, you've kind of got to get it out there to allow other people to appreciate, even if there's a bit of risk.
So, Joss, I kind of want to move away from the Ming vase analogy, but...
Really stretching that analogy, aren't we?
In terms of translating that into that protection of legacy, which I think is a really important part, but also protecting members, protecting the services and that idea of community, how do we then move forward with this risk idea of innovation and protecting all of those aspects when we're thinking about our learnings in what can feel like a bit of a faster-paced, fintech, agile landscape, but translating that into what credit unions are trying to do?
Yeah, reflecting on today, I think it's helpful to decouple protecting your values and your mission from protecting how you're living it right now. And there's this really interesting concept, which is like strong views weakly held, So it's like the way you do the how is not important, because the people that love you, they don't love you for like your tech stack, or they don't love you because of your phone system, or because you have a management meeting at 2 p.m. on a Wednesday afternoon that lasts 3 hours. They love you because of the values. And the way that I think is really useful to maybe bring that into an organization is to have some product principles. And I think a really good indicator, from my point of view, of a strong, innovative culture is where you have like a product roadmap session. And if that is not a really impassioned conversation, that's bad. Do you know what I mean? And that's where you want to bring your strong views weakly held. And I've been in lots of organisations where we've sat down and had those conversations. I was also on the board of a business called Gaia that insures your fertility. Absolutely amazing. There's loads of really
yeah. They are really good, Gaia, yeah.
There are loads of really good fintechs that I've worked with, but I always think it's a good sign if you have some product principles which reflect your mission and values, and you use that to look at, well, what's on our roadmap, and that kind of urgent, important scale as well. Because your culture is strong if you're surrounded by a group of people who will have a really impassioned conversation about what should be built next, what should we be focusing our time and energy and resources on. Are we fixing tech debt? We're a fintech startup and we have amazing engineering capacity, but every Wednesday afternoon is still Tech Debt Wednesdays. You build up tech debt, whatever you're doing, all the time, and you always then still have that trade-off of like, just from a recent example, we're talking about, are we gonna like increase the platform capacity in AWS and build a new data flow into, we use Mongo for that, and reporting, or are we going to add a functionality so we can put an ISA behind our multi-pot functionality? But those are the kind of trade-offs and the kind of conversations I think you want to be having, and then always link back to your principles.
What I'm really interested in is hearing you talk and just thinking about my application as a board member in a credit union is now thinking about that from that relationship between the executive team and the board, and how both layers, if you like, of management within the organisation can work together to be more comfortable with innovation. Jen, any tips on how that can work?
Yeah, my favourite is the red wine test. And I live and die by this. I know that somebody in the room has adopted it, which is phenomenal. The red wine test came about because very frequently people assume understanding from others. And particularly when you get CEO level, it can be because you have more information on what's going on in your organization than anybody else. You will assume, and every CEO I've worked with does this, that everybody understands things or has taken something that you have said in the way in which it's intended. And the reality is that's never true because we're humans. You need to be incredibly clear what good looks like. You need to be incredibly clear, and the reason why the red wine test comes, because I love red wine, is sitting here in a year's time, what will enable you to open that really nice bottle of red wine and enjoy it? What will you need to do to have earned that? And if you say, you put it that way, it means you need to be incredibly clear as to what outcomes you're delivering. It's not, oh, we want to do this thing or that thing or other. It's like, in a year's time, we would have done X, Y, Z. Now, the people that need to all be on the same page, and ideally you need to write it down, quite literally, is everybody on the board needs to agree with it, and everybody in the exec level needs to agree with it, and then everybody in the exec level should tell every single person in the organisation. When I first got to Octopus, there were 47 concurrent technology projects and regulatory projects. There were 300 people. It was clinically insane, and it was completely impossible, and there was massive change fatigue. So the first thing I did is, you got to prioritise, which means you've got to stop. So we're going to do half of this. So you need to tell me strategically, where do you want to be in 3 years? Which means we need to be where in 1 year. And therefore, we don't need to do half of this stuff because it's got absolutely nothing to do with where we want to be in 1 year's time. And so those red wine tests are, to me, like absolutely the cornerstone of getting anywhere.
Okay. And in terms of where to start, I guess, or not necessarily where to start, but what the priorities are over the next few years in terms of innovation, maybe even short term, maybe 6 months. What kind of trends are you finding are quite exciting in fintech that you think might be worth credit unions also thinking about? Joss, because you look scared, I'm going to come to you. Maybe there's too many.
No, do you know what? I kind of think, and we're probably alluding to what we were talking about earlier about AI, I kind of think it's really easy to sometimes put the cart before the horses, so the technology before the problem. And really, I kind of think it's not, who cares what the solution under the hood is? I think don't use AI for AI's sake, or don't use APIs for API's sake. Really start with, what are you trying to achieve? And then what is the right technology to meet those needs?
Do you think that's one of the misconceptions about innovation, that it can just be taken to mean...
It's like, oh, we've got to use AI. It's like, what a hassle. I've got to find a use case for AIs. AI is like horrifically unenvironmentally friendly. It's really annoying a lot of the time. Yeah, we use AI in our organisation a lot, like across every function, but only where it's sort of, there's a use case for it, and I've used it in loads of ways that's been horrifically annoying and a horrible waste of time, and creates all this content I don't want. But in terms of where I see it going, and I think it's more about going back to product market fit and going back to actually the really interesting conversation earlier about embedded finance. I think that is a big trend, really. It's about who's going to win the sort of eyes of users ultimately, and do you bring the outside in, as like Lloyd's Bank is trying to do, or are you putting the inside out? And where are we landing on that? Cool. And I think what we're part of the, okay, where is it natural for someone to save, and is that somehow embedded into the flow of the employer payroll?
Perfect. Thank you. And I don't know if anyone noticed, but Jen put her mic up instead of putting her hand up to speak. So I'm going to go to you to make your point.
So much more impactful, and then, I'm sure, Jen.
Then I will hand over to you guys to ask questions in the last 10 minutes, because I'm really keen to get your input and feedback and get you to take some practical tips away too. So Jen.
No, it's following on from what you were saying about the use of AI and what George was talking about with the MIT report. So the MIT report basically said what most of us who are actually in AI already knew, which was the successful outcomes of AI adoption are absolutely terrible. It's 5%. But the thing to take from that is that isn't because AI is rubbish. Some AI is rubbish for some things, The thing to take is the finding in that report is because the majority of it was, exactly to Joss's point, not outcome orientated. A lot of boards in private sector are putting pressure on the exec to adopt AI, because AI is brilliant. You've got to start with the problem. What is the problem we're looking to solve? And then AI, there's 3 different types of AI. One of the types has a subtype, which is commercial large language models. So ChatGPT, it's great for creating a otter unicorn or forging a CV. It's absolutely catastrophic for financial services because it hallucinates, which it makes stuff up. It's incredibly costly. There's an AI pricing bubble, to the lady's point before, where pricing is being suppressed. So when you're looking to implement a tool, AI is just another tool, a really powerful tool, but a tool. Understand the problem that you're starting with, and then use the technologies. But the final thing I'll say on AI is only as good as the data on which it's based. And agentic AI is a massive buzzword. It can only inform people. So the example I use is booking a restaurant. If you had a new PA who only started that week and you just said, oh, I need to book a restaurant next week, she would be there going, oh, God, what, where, how, when? Because she doesn't know if you've got allergies. She doesn't know where you like to eat or your culinary preference. She doesn't know what time you like to eat. And so actually it's completely useless asking her to do that. Agentic AI is exactly the same. Whereas 5 years down the line, she understands all of that. So agentic AI, if you're looking at using agentic AI, which will probably be some of the first uses that come to you, be really mindful that it cannot achieve its outcome if it doesn't have the data to enable it to do so.
Perfect. Thank you both so much. I may be coming back to you with some other questions of my own, but first of all, would anybody like to ask anything of Jen or Joss?
Stony silence.
It's late.
It's comatose.
Bearing in mind that I'm expecting everybody to be trying to take some practical tips away to embed in their organisations on Monday, are you sure you don't want to make the most of this opportunity to ask Jen or Joss anything? Okay, well, I have one other while everybody's getting their brains ready as well to ask, hopefully, a question. To stay relevant, if I were to give you this sentence, to stay relevant, credit unions must start what?
Go on, you go, Dan.
Meeting the customer where they are, or meeting your members where they are. I think the roadblocks to use, genius. It doesn't matter if your member is somebody that still has a checkbook. It doesn't matter if your member is somebody that doesn't know what a checkbook is. If you want to increase your exposure to your members, you've got to meet them where they are.
I love that. I think I'd say build for your prospective members. Who do you want to work with? And just really understand them and their needs. I think don't worry about anyone else. Don't worry about your board. Don't worry about
controversial.
But it's true. It's like, and just doggedly understand who you want to help and understand their needs. Make no assumptions. And talk to them. So I think it's like, yeah, serve the needs of the people that are currently working with you, but they won't be the future. Talk to people that have never heard of a credit union, would never ordinarily work with you and understand what they want. And from a first principles perspective, like, what is their job to be done? Most people don't want to open a savings account or get a personal loan. They want some financial security. So their job to be done is like, they want to save for Christmas or whatever it is. They want to buy the car and just understand how they're doing it and how you can fit into that flow.
What's that analogy? Nobody wants to buy a hammer or something. They want to nail a
They want to
something
put a
into the
picture,
board.
put a shape, yeah.
There's quite a good book called The MOM Test, MOM. All of it won't be relevant, but what it really is talking to is how you have those conversations, how you understand what people want. And I think particularly to Joss's point, if you are looking to expand your membership or speak to people who don't know what a credit union is, it's a really short book, it's on Audible as well. I'd really suggest getting it because it's a really useful tool in how to have those conversations to get honest outcomes rather than leading people to tell you the information that you want.
Would you give advice about a step one to take if anybody doesn't feel that they're able to do innovative things right now, what would be the starting point and step one that if someone asks for that advice from you? Jen, I'll just start with you, and then Joss, I'll go to you.
Know where you want to get to. You wouldn't get in a car and go somewhere without knowing the destination. And I would just ask the room, is everybody really clear what good looks like in a year's time? Is everybody really clear what they want to do in 3 years' time? And it's ironic saying that as a startup, because everything changes 75,000 times a day. His startup environment is not one to go in if you like continuity or clarity. But we still always have our North Star, and we still always go to it. And we might then change that North Star, but we always have a clarity as to where we're going. And we have that strong opinion softly held. So if something changes, we adapt it. But it does mean that all of us are pulling in the same direction.
Joss?
Do you know what? I would say, do it for the fun of it. It's a buzz. It's so much fun. Like, it's so great when you see you've built something with your team, and I'm sure you've all done it before. Isn't it wonderful when you deliver on a project and you get the first customer? I was just talking to someone yesterday who was like, we just implemented loan decisioning that takes 8 minutes, and we're just sitting there waiting for the first person to sign up. And we're the same. We have a ping that goes off every time someone sets up a savings account, and then there's confetti if they're a first-time saver, and it's such a buzz because you've done something wonderful for someone. So bring your team together and inject that sort of fun energy into doing something innovative, because and work with people that you enjoy working with and that you get energy from, because it should be something that gives everyone positive energy. And I think that's a great way to think about change.
I'm just going to add one more final thing in. Don't be paranoid. Don't let perfect be the killer of good. I love Pareto's rule, 80-20. In every change project, the last 20% takes 80% of the effort. It's so easy to want to aim for perfect. You will always fail. You have to aim for perfect, but be super happy at 80%. And anything that incrementally moves the dial, and the number of people I've spoken to over the years where they're like, oh, we can't get all the way there. Well, just start. Do one really easy project, one really easy thing where you can see the benefit, particularly if you've been through a big project and it's failed. Do one really easy project, build that muscle memory. It's like a muscle, it's a skill, you've got to learn it. Pick something that will work, pick something that you have confidence you can do. And if you haven't got the skills in-house, again, somebody who's an HR manager doesn't know how to source technology. I don't know how to be an HR manager. That's cool. Don't go to PwC and Deloitte, but there are a whole host of people out there who can be pragmatic, proportional, and useful, who can, if you need that interim skill set, support. But trying to go for that perfect scenario will stop you from doing anything.
Thank you so much, both. Last chance, anybody have a question?
Thanks. Do you think innovation in financial services is difficult because it's so highly regulated, particularly in Europe? And you were talking about taking risks, and it's okay if things go wrong, but in a regulated environment, it's more difficult because a mistake is then potentially more catastrophic because of the regulation.
I think it's yes and no. So we're actually regulated by the FCA. It depends what you're doing. And again, I would say, what is the impact versus the probability? Almost no regulation is very clear. Most regulation is pretty ambiguous. No offense to the FCA man in the room. And so whenever I'm doing a regulatory change project, I always go, do we want to be the Ferrari of this? Do we want to be the Ford Focus? If we're going to be the Ford Focus, we'll write a policy that says we're going to be the Ford Focus. That's totally allowed. And then we'll set our left and right of arc, and we'll operate within there. So I think it's really doable. I think there are more considerations, but I also feel less risky doing that than building an aircraft hangar in Belize, where I had to dangle off a cherry picker. So, I think we can be, I think it's such a good point to raise, but I think we can be a little guilty of going, oh, because we're regulated, it can be a bit hard. Go and work in manufacturing, go and work in construction, the risk is way worse.
Yeah, or medicine.
Medicine, yeah.
No one's going to die. But do you know what? I've been spending quite a lot of time with the regulators, and I spend quite a lot of time with the head of banking policy for the FCA, who is a total legend. What a man, love him. But like, they are removing barriers to innovation for us
They're
right now.
actively trying to encourage innovation.
They issued my statement with the exact sentence I asked for, which said we can apply simplified due diligence to payroll savings, which means you do not have to pay for KYC or put anyone through a KYC journey to offer them payroll savings. Talk to me about it. I'll tell you about it. I'll tell you how we do it. I want to share this knowledge. Similarly, how do we get mass adoption? Let's talk to those regulators and push the regulation where we want it to be. I think we'll get mass adoption of payroll savings if we can convince the Treasury / the Pension Commission to enable us to have a salary sacrificeable emergency savings pot that comes out of gross salary, so that the employer makes an NI saving and the individual gets a massive saving. But it would basically mean that it would be a no-brainer for everyone to adopt. So I think, regulation is tricky, but don't underestimate your power to move those goalposts if they don't work for you. Because I think you're coming from the right place. It's not, sometimes really it's more about, well, how do we push financial inclusion? How do we push the right outcomes?
Perfect.
And if that means change the regulation, let's change it.
Thank you. Thank you. Thank you so much, you two wonderful, innovative founders, successful, great people. I really appreciate having you on the panel. Thank you to everybody for staying with us to the end of this day as well. It's been brilliant. I've loved the whole thing. Go manage innovation with purpose and drive and intention, and let's see where you get to in a year's time with that red wine testing. We look forward to hearing all about it this time next year. I do have to go for my train, but I'm sure that these two will be absolutely delighted to talk to you if they get a chance in networking. Thank you so much, everyone, and thank you to these two.
Well, thank you very much to our panel. We're just going to get a few words from Paul. Going to get a microphone for Paul. Can I get one back? See you later. I thought there was so much in there. I hope you're all listening intently. I wanted to ask about whether these guys recruit people who are innovative or recruit people into an innovative culture and they become innovative in that way. But these conversations will run and run, right? So I'd like to hand over to Paul Jones to just create some thoughts to close our day.
Okay, thanks, Nick. And given what happened this morning, my risk appetite for going on that stage is very low. So I'm going to stay here. So I've just been asked by Nick just to say a few words to wrap up our day. It's been a great day. There's been a buzz in the room. Everybody's been engaged in conversation and dialogue and sharing ideas. And I think it's been one of our best Swoboda conferences so far. And that's down to you. And thanks for all your participation and active engagement and involvement in the programme today. Of course, today has been, in many ways, there's been quite a number of themes, overlapping and interrelated themes. But one theme, of course, has been relevance. Remaining relevant, whether we're remaining relevant, as many of the credit unions in Ireland are doing, remaining relevant within Irish society, or becoming even more relevant in British society. And relevance, really, what I think we concluded in many ways, or in some kind of one thing I pulled out of it, to remain relevant, actually, we need to grow. We need to grow our members. We need to grow the activity of our members if they're dormant, and we heard about that in Ireland, how many dormant members there were. We need to grow our assets and savings, and eventually, and our loans too. So growth. But what's involved in growth? And all these themes came out today. To grow, we need innovation. So it's a lot about innovation and digitalization. And consolidation, coming together, mergers perhaps, collaboration, and a big one, efficiency, becoming much more efficient so that we can develop income and profitability to serve our members. And of course, remaining relevant, I really like that, I think it was Joss and Jen said, what's really at the fundamental kind of heart of remaining relevant is actually serving our members. That's what it's about. So we only want to grow so that we can serve our members better. But growth involves also managing change. And we had a lot about change and change management and so on. And I think one of the points that was made this morning about when I was talking about fast cars going round in lanes, somebody said, well, where's this lane going? Is it going round and round and round in big circles? Well, no. So one of the things that we have to be very clear about is our direction of travel. What's our vision? What is the vision for the credit union sector in British society in the next 5 years or 10 years? What's the vision for remaining relevant in Ireland, in credit unions in Ireland? What's the vision for the future? Where are you going? Are you going to become full banking service providers, indistinguishable from a bank? Or are you going to be still in some community collaborative space? There are all kinds of questions around the vision about where we're going. And that's why we called our project the United Vision. Because what we're going to be doing in the kind of second stage and third stage of our programme, we're going to be exploring with credit unions in Britain around their vision, where they want to go. We have to be clear about where we want to go and the kind of financial institution we need to be or want to be, and our members want us to be within British society. So that's really important. Once we have a vision, once we have an idea of where we want to go, maybe then we can then use the red wine test. I like that one. About what does good look like? What does good look like for our credit unions in Britain in the next 5 to 10 years? And one of the things that we're going to be doing is developing a road. Once we're clear about the vision and clarity about our destination, we're going to work on roadmaps, kind of, business models to get there. And that's going to be, probably will come up in future Swoboda conferences. I like that about the speedboat. Who was talking about the speedboat? Yeah, we're going to get in that speedboat and hopefully have some kind of protection looking over us. So really, that's all I need to say, really, about how great this conference has been. And, it's been a great attendance. I do have some thanks some messages of thanks. First of all, I want to thank Simon and the AV guys over here. Been great. Because for those that were at the dinner last night, really, I was really worried about the sound in this room. And do you remember the clicking of the microphone and the reverberation? I thought, oh my God, what's going to happen tomorrow if it's all like that? But it wasn't. Thanks, Simon and everybody, because it's set up, it's been really easy to hear. I also then want, they won't be here, I don't suppose, but I want to thank Erin, Maddie, and the Liver building team who've made this possible with the lunches and the organisation and setting everything out. So very much thanks to the Liver building team. I've got some very, very special thanks for our Bridgine, who's been amazing. Bridgine is now Swoboda Ireland. And also for Sheila. Where's Sheila? Where's Sheila gone? Where is she? Sheila. Without Bridgine and Sheila and Nick, of course, thanks to Nick. Where's Nick? There's Nick. Thanks to Nick. This would not have happened. And of course, everybody, I think, by now has learned that I've had a back trouble over the last 2 weeks and not contributed that much to the organisation. So it's been great. But then the last and the biggest, well, not the biggest, these are all equal thanks, to be honest. One's not bigger than the other. But thanks to all our speakers. Thanks to you all for bringing your insight, information, understanding, perspectives, and take on our credit union sector. Thanks to you all. Thanks to George for coming all the way across the Atlantic Ocean to actually speak to us again. But thanks, everybody. I think that's everything, really. I don't think we need to rush away, because of the people I've not spoken to, you know, in the rush of the of today. Is there anything else that I need to say, Nick? Well, that's it, really. But don't rush away. I don't know if there's any possibility of another coffee. Maybe not. But whatever. So safe home. Thanks a million for coming. Bye.